Hi guys, my name's Ara. I am a full stack developer with a passion for investing, and people always ask me, what are some stocks that I can buy right now? What stock should I invest in? All kinds of questions like that. I've been investing for 12 years and I must have invested in hundreds of different stocks along the way. So today I would like to talk about 5 stocks that I think that you can put your money into right now that are growing like crazy and they are great value right now. The first one on the list has to be Facebook. Facebook is my favorite investment right now. It is trading around $155 and it's also trading around 40 times earnings. Now 40 times earnings is usually a lot to pay for a stock, and very, very rarely do I pay that much for a stock. But if you look to the future and see how fast Facebook is growing their revenue, how fast they're growing their sales, how fast their earnings are going up. Their earnings are going up like crazy. So it is, it's wrong to think that Facebook is trading at 40 times earnings, because that's not what their earnings are going to be in the future. Their forward PE ratio, or their forward earnings, their earnings for the next 12 months, is probably going to be about 50% higher than they are right now. So their PE ratio would be about 25 times earnings. And for such a great growth company, paying 25 times earnings is very, very inexpensive in my opinion. I definitely expect this stock to go to around $200 a share sometime in 2018. And I read the news, they have almost 2 billion users, which is awesome. They have 250 million daily users of Instagram, which is very awesome. And once they start monetizing Instagram, they're just going to be raking it in. That's a huge part of their revenue growth. The next stock, also a very common choice, is Google. Google, I do not personally have too much money invested in that one, but I did buy my daughter a share of Google today. They're currently trading around $960 a share. And again, this is a company that makes their money off of advertising, and they're such a good growth company. They have such good long-term prospects, and this company is worth so much more money right now. If you look at their forward PE ratio, they're in the high 20s, around 27 times earnings, and that's just such a great value for a company with such stable earnings growth. It seems expensive at $960 a share, but it really is a good value. Usually I like to invest in dividend-paying stocks, so I'll list a few of my favorite dividend-paying stocks, because Facebook and Google are atypical for me to invest in. My least favorite of the 5 stocks today would be Paychex. P-A-Y-X, and this is a payment processing company. I used to work somewhere, and every time I got my paycheck, it said Paychex on it, and they get a small percentage of the payroll. And the reason why it's a great company to invest in is because their earnings are going up and up and up, and their revenues are going up and up and up. It's just a great company to invest in. The economy is going good, despite any negative things you might hear. Not everything, but a lot of things in the economy are going very, very well, and Paychex is a good company to invest in. The reason why it is probably my least favorite of the 5 I'll talk about today is because it's trading at 27 times earnings, which I think for this company is a little bit high. So it might be kind of a bad time to get in. But overall, if you invest in Paychex long term, you should do very, very well over 5 years. I think it would be very reasonable to think that you would double your money in this stock over about 7 years' time. One of my favorite stocks ever to invest in is T. Rowe Price, T-R-O-W. T. Rowe Price is a brokerage, and they make their money from mutual funds, the fees on mutual funds, the fees on index funds, and they also make their money from trading fees when you buy stocks. This company has zero debt, or very, very close to zero debt, which is terrific. They have loads of money, like all the stocks in this list. And they've also raised dividends consistently for more than 25 years in a row. Now, this stock only has a multiple of 14. This stock is very, very cheap. The fear is that more people are investing in index funds instead of mutual funds. And, you know, because they don't make as much money off of index funds, you know, people are not willing to pay such a high multiple for T. Rowe Price. But, you know, they've outlasted, you know, hundreds and thousands of things over the last 25 or 50 years, or however long they've been paying dividends. They've raised their dividends every single year, and they're growing their revenues, they're growing their earnings, and at such a cheap multiple, it's $73 a share right now. I think this stock could very conservatively go to $100 a share by the end of next year. I think this is a great choice. And on top of that, they pay a 3% dividend. Same as Paychex. Paychex pays a 3% dividend. Both of them pay great dividends. So you actually earn money while you wait. The last stock on my list that I will talk about is Hormel. I have invested in Hormel for my girlfriend for a long time now. And again, this is such a terrific company. They're growing revenues. They're growing earnings over years and years. This is a food company. Probably a lot of the food that you guys eat has been, you know, by the Hormel company. They make a lot of packaged foods. They make a lot of all kinds of different foods. Probably 25% of the grocery store is Hormel. I don't know. I just made that up. But anyway, they're a great company. I've already made my girlfriend a lot of money for them. I invested into this company for my daughter as well. I bought her some shares. I try to buy her companies that she will recognize the products and use the products. And this company pays about a 2% dividend. I think the PE ratio is in the low 20s, maybe about 20 to 24 times earnings. It's very reasonable considering that this company is such a stable grower. Their sales are growing, their revenue is growing, they're paying a very, very stable dividend. They've been raising the dividend. Such a good company to get into. So I'll end the video now because it's up to about 8 minutes. I do need subscribers, so please hit that subscribe button and share this video with your friends. Thank you.